If you're paying rent every month and you're paying it on time, I want you to hear something most people never tell renters. You are already proving you can carry the single biggest cost of home ownership, the payment. I'm Lance Hulsey. I spent years helping people buy, sell, and invest in real estate across Silicon Valley and the Santa Cruz coast. And I run a property management company, so I see both sides of the coin. I see what renters pay every month. I see what owners build in equity over those same years. Here's the uncomfortable truth. A lot of renters could already qualify to buy. They just don't know it yet. They've been told a myth or nobody's walked them through the math. So today, that's exactly what we're going to do. Let's get into it. What this video is and isn't. It isn't a quick promise, so you know that this isn't hype. I am not going to tell you everyone should buy a house tomorrow. Renting is the right call for plenty of people. If you're moving in 2 years, if your income is unstable, if you haven't built a cushion, that's real. What I am going to show you is this. The gap between I rent and I own is usually a lot smaller than it feels. We'll cover why your rent check is secretly a mortgage audition, the 3 numbers lenders actually look at, and 5 real paths renters use to buy, including a couple most people have never heard of. Stick around for number 4 because that's the one that surprises people the most. Why your rent check is a mortgage audition. Let's start with the mindset shift. When you pay rent, you are demonstrating 3 things every single month. 1, you can produce a large housing payment. 2, you can do it consistently. And 3, you're doing it after taxes with no benefit coming back to you. Now compare that to a mortgage. A big chunk of mortgage payment isn't really an expense, it's a transfer. Principal goes into your own equity, and the mortgage interest and property taxes are often deductible, which a rent payment never is. So dollar for dollar, an owner's payment does more work than a renter's payment. Here's the part that gets people. Rent goes up. Historically, rents climb with the market year after year with no ceiling. A fixed rate mortgage payment, the principal and interest piece is locked. 20 years from now, your rent could be double what you're paying now. That fixed mortgage payment is the same number it was on day one. So when someone tells me I can't afford to buy, I can barely cover the rent, my honest answer is often, you may be affording the hardest part already. You're just doing it for the landlord instead of for yourself. That's not a guilt trip, it's just the math. Let's make sure the math actually works for you, because sometimes it doesn't. And I'll be straight with you about when. The 3 numbers lenders actually look at. People think qualifying for a mortgage is some mysterious black box. It isn't. It comes down to 3 numbers. Number 1, your debt to income ratio, or DTI. This is the big one. Lenders add up your monthly debt payments, the future mortgage, car loans, student loans, minimum credit card payments, and divide it by your gross monthly income. Many loan programs want that total number under about 43 to 45%, and some can go higher. Here's the key insight for renters though. Your current rent doesn't count against you. It gets replaced by the mortgage. So if your rent is already $3,000 and the mortgage payment would be $3,200, you're not adding $3,200 of new burden. You're swapping one housing payment for another. Number 2, your credit score. You do not need perfect credit. Conventional loans often start opening up in the 620 range, and government-backed FHA loans can go lower. A better score gets you a better rate, but I don't have an 800 is not a reason to stay a renter. And if you've paid rent on time for years, some lenders and programs will now let you use that rent payment history to help build your credit profile. Number 3, your cash to close. This is the down payment plus closing costs. And this is where the biggest myth lives. The idea that you need 20% down, you don't. We'll break that down in paths coming up. Notice what's not on this list. Being rich, being a finance expert, having a trust fund. It's just 3 numbers. Income relative to debt, a reasonable credit history and credit score, and some cash to get out or get in the door. Renters hit 2 of those 3 all the time. Usually it's just the cash piece that trips people up. The 5 paths renters actually use to buy. So let's solve the cash piece. Here are 5 real paths. These aren't theories. These are what I see people actually use. Path 1, low down payment loans. This is the foundation. FHA loans can go as low as 3.5% down. Conventional loans have options as low as 3% for qualified buyers. On a real purchase, that's the difference between needing $100,000+ and needing a fraction of that. Yes, you'll usually pay mortgage insurance until you build enough equity, and that's a real cost we'll factor in, but it's the lever that turns someday into this year. Path 2, down payment assistance programs. California has programs, and so do many counties and cities, specifically built to help first-time and moderate income buyers cover the down payment and closing costs, sometimes through a second loan that's deferred or even partially forgiven. These programs change, they have income limits, and they run out of funding. So the move is to check what's active right now before you assume you don't qualify. A lot of renters leave free money on the table simply because they never asked or never investigated. Path 3, the gift and the cosigner. Family help is allowed, and it's more common than people admit. Gifted down payment funds are permitted on most loan programs with proper documentation. And a cosigner or co-borrower, a parent, a sibling, can strengthen your application. This isn't cheating, it's how a lot of families transfer a foothold to the next generation. Path 4, and this is the one I told you to wait for, house hacking. This is buying a property, living in part of it, and renting the rest of it to offset the mortgage. A duplex where you live on one side and rent the other side. A single family home with a separate unit or an ADU. Even renting out spare rooms. Owner-occupant loans with those same low down payments often apply to 2 to 4 unit properties, meaning you can buy a small income property with 3 to 5% down loan because you're living in it. Your tenants help you make the payment. For a renter trying to break in, this can be the single most powerful move. It turns the house from a cost into a partner. And isn't that a great way to start your process? Path 5, buy where the math works, not where the emotion is. You don't have to buy your dream home right out of the gate. You don't even have to buy it in the most expensive zip code. Sometimes the smart move is a condo, a townhouse, or a property a little farther out. Something that gets you owning and building equity, even if it's not forever. You can always trade up later, use the equity you've built, because the goal of the first purchase isn't perfection, it's to stop renting by accident and start owning on purpose. The honest caveats. Now, because this channel is about straight data and not hype, let me be clear about when you should not rush in. If you're going to move within 2 to 3 years, the transaction costs of buying and selling can eat any gains. Renting may genuinely be the winning decision. If your income is unpredictable, lock that down first and never drain your entire emergency fund to close escrow. Owning comes with repairs, and a furnace doesn't care what your bank balance is. Buying is the right move for a lot of renters. It is not the right move for every renter. The point isn't to pressure you into a purchase, it's to make sure that if you're staying a renter, you're doing it on purpose, not because you believe a myth that you couldn't qualify to buy. Does that make sense? All right, so here's what I want you to do. Take your rent payment, that number you already pay every month without fail, then go run it against what a mortgage payment would actually look like and what loan programs and assistance you'd qualify for today. Don't do any guesswork, get the real numbers. If you're in Silicon Valley or here in the Santa Cruz coast and you want help running that math, honestly, no pressure, no hype. That's literally what I do for my friends and clients. The details in the description below, and I'm happy to walk you through your specific situation. If you want to do it somewhere else and you need an agent, I can give you a great referral. If this gave you a new way to think about that rent check, hit subscribe. I put out straight, data-driven real estate breakdowns every week. I'm Lance Hulsey. Stop renting by accident. I'll see you in the next video. I hope this was helpful. Again, please subscribe, like, comment. I'd love to hear what your thoughts are on this video. Have a great day, everybody. We'll talk to you soon.